Hey everyone, thank you for tuning in. In this video, I'm going to highlight one Warren Buffett stock that's down 24% off its high that you could buy now and hold on to it for the very long term. That's because this company is likely to be around for a very long time. What is this company? This company is Amazon. Amazon is the stock that I am talking about here, and I'll highlight why I think this stock is an excellent buy right now. So let's get right into it. Starting with revenue. Over the trailing 12 months, Amazon has generated over $538 billion in revenue. Now that's coming in the form of several different businesses, including the very lucrative cloud business that generates profit margins close to 30%, and then the e-commerce business, which generates profit margins that are much lower. However, the e-commerce business fuels a lot of the other businesses. For instance, the e-commerce business allows Amazon to sell advertising, which is also a very lucrative business model. So the e-commerce business is not all bad news. However, Amazon investors should hope that over the longer term, the company can diversify away from that lower margin business and more into the rest of the segments of its business that are generating higher profit margins, like the cloud business and the advertising business. The other reason I was going to highlight why Amazon stock can be a buy right now and hold for a long time is because of the free cash flow. Now, before the outbreak, Amazon was generating free cash flows close to $15 billion. And after the COVID-19 pandemic, Amazon experienced an absolute surge of customers coming in. So it needed to invest in the logistics network to make sure it could fulfill all those orders. And so Amazon spent billions and billions of dollars expanding the fulfillment network, and that caused its free cash flow to turn negative 30 billion at the worst point. And so at this point, I was questioning if Amazon could turn things around because it spent so heavily in that segment. But to my surprise, and to many investors' surprise, Amazon has done an excellent job controlling costs and reducing its capital expenditure. In fact, this year, Amazon said it's only going to spend $50 billion in capex. Did I just say that? Did I just say only $50 billion? But it's down by $9 billion from last year, where Amazon spent $59 billion on capital expenditure. So because Amazon spent so heavily in 2020, 2021, and 2022, it doesn't need to spend as much on capital expenditure over the next several years, and it could grow into the network that it's already built. And so free cash flow, I would not be surprised if it jumps up over $10 billion again for the next several years, starting in 2024. And finally, yes, Amazon stock may not be cheap, trading at a forward price to earnings of 46.85, but if you factor in the growth for this company over the next year, over the next 3 years, over the next 10 years, then you're actually getting the stock at a good price right now, because it's got so much growth that it is expected to achieve over that time frame. Still, even though Amazon dominates the online shopping space, the overall online shopping industry is nowhere near where I think it will be at maturity. Right now, roughly less than 20% of all shopping happens online in the US. I feel that number is going to rise over the next several decades to be closer to, I would say, 40%. It's not going to be 100% of all shopping. Of course, people still want to go out and see some things in person and try things on, and etc., etc. So it's not going to be 100%, but I think it's going to be much higher than where it is now. And Amazon, as the largest participant, as the largest market share owner of the online space, stands to benefit from that tailwind. So if you're a long-term investor, I think Amazon is one Warren Buffett stock that you could buy now and hold for the very long term.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.